What's going on, you guys? My name is Zach Hartley, and it was a very exciting week in the markets. So in this watch list video, I'm going to break down for you what happened last week, as well as the stocks that are at the top of my radar going into Monday morning. Here's everything you need to know. Let's go. Okay, so this is the stock that was at the top of my watch list going into this week. It is Fintech Acquisition Corp 5, FTCV, and this is a SPAC that is about to merge with the company called eToro. They're an online brokerage company. I've made a full video breaking down the company, and this company has been on my watch list for 2 weeks now because I absolutely love eToro, and this is how you can get exposure to it. This is the chart that I showed you guys in last week's watch list, and I said as soon as it starts to turn around, I want to enter this stock, and that is exactly what happened on Monday. We had a beautiful green day. I got into the stock right here on Monday, and then Tuesday it didn't really do that much, but on Wednesday, Thursday, and Friday we ran up all the way to over $15 from a low of $11 where we closed on Friday. So absolutely phenomenal run this week. You can see my little green arrow. That's when I got in, and I posted this pretty much all over the internet. I've talked about it on my weekly watch list for the last 2 weeks. I've talked about it in my Discord chat. I actually showed the day that I got into it, and I said it's breaking out, and that's why I got into it. And then I also posted it for free right here on YouTube, so you could have seen exactly when I got into eToro, which is absolutely amazing because so far we're up 22.83% on this stock in just 1 week. I bought it on Monday. The stock closed on Friday at $14.48. We're up 22.83% in just a matter of 5 days. I also took a position in the company using options with an expiry of November 19th, 2021. And so I'm pretty excited about this one. It's also up 15.69% in a matter of just a couple days. So we are also doing extremely well holding the stock and the options on this one. And I've pointed it out to everybody over the last 2 weeks. The next company I want to talk about is TechX. This is a company where I interviewed the CEO about 2 weeks ago, and the stock doubled this week. It went from a low of 60 cents. This is where it closed out on Friday. Monday, Tuesday, Wednesday, Thursday, Friday, it was then at $1.20. It closed out the week at $1.20, and it opened the week below 60 cents. The stock quite literally doubled this week on some good news from one of its subsidiaries. I interviewed the CEO just like a week or two ago. If you want to see that, you can watch the entire interview right here. I also posted the day before the stock ran up. I posted it in my Discord chat, and I said TechX was starting to turn around, and then I posted the stock chart with my analysis. So we are doing extremely well. We've had a couple of great calls this week, and the portfolio is doing good. Okay, now let's start looking at the markets. This is the NASDAQ index. Remember, this is heavily tech focused, and as you can see, it's been a good sort of 2 weeks for tech. We've ran up from a low of below 13,000. We're now approaching 14,000 right here, and we are approaching the highs that were set back in February before everybody was preaching about a market crash. So any of the YouTubers that were telling you that the market is crashing, this is dead on proof that they were wrong and that you should have bought the dip. Pretty much what I was preaching the entire time along. So this is what the NASDAQ looks like. You can see the S&P 500 as well. It is set an all-time high on Friday. It is doing extremely well. Industrials are doing well. Banks are doing well. REITs are doing well. There's a lot of things that are doing very well in the market. The Dow Jones also set an all-time high on Friday. And so when you look at the market in general, you got the Dow Jones, which is mostly your industrials. You got the S&P 500, which is kind of a broad market index. Both of them set all-time highs on Friday, and tech has done extremely well over the last 2 weeks and is approaching the all-time highs from February. So overall, the market is extremely strong. The market is doing extremely well, and you should have bought the dip over the last month or two when the stocks were falling. Now, Bitcoin, this is a slightly different story. It hasn't had much of a dip. What I see here is actually an ascending triangle or a bull flag, whatever you want to call it. But what I'm seeing here is some resistance right around 60,000, and then we've got consecutively higher lows. Every time the stock comes down, it comes down to not quite the same low where it was before. And so that's basically led me to draw a trend line that is moving up here. I've got resistance at 60,000, and what I am expecting is for Bitcoin to kind of break through that 61,000 mark and start to run up again, or I think it's going to get rejected at 60,000, 61,000, and it's going to start to come back down, and we may see a little bit of a correction. I think we're going to see that sort of unfold over the next 1 to 2 weeks here. And if it does go up, I think I'm going to do extremely well because I own a couple of miners right now. Now, when we start to look at COVID numbers across North America, this is where it gets interesting because the USA is actually doing extremely well. Vaccines are rolling out, and it doesn't look like the numbers are increasing at any type of dramatic rate over the last few weeks, which is very, very nice to see. However, when you look at Canada, we are not doing nearly as well as the USA. We definitely did well for a little while there, but the month of March and the end of February there were not good at all for Canada, and we are approaching the highest record of daily new cases since back in December and January. So definitely not a good sign here, a little bit worrisome in terms of Canada, but hopefully the vaccine rollout comes a little bit quicker here over the next few months. Now, when we look at earnings for the week coming up, there's not a huge number of companies that I follow pretty closely. There's a lot of banks reporting over the next few weeks. You've got Wells Fargo here. You've got, where is it, BlackRock. You've got BNY Mellon. You've got KeyBank. You've got Sunoco. You got a couple of big kind of financial institutions that are reporting. You've got some airlines in here. You got Delta Airlines as well, Bank of America, Citigroup, Goldman Sachs, PNC, Bancorp. Those are all, most of those are banks. And so lots going on this week in terms of the financial world, but not a whole lot in terms of high tech or growth or anything like that. Now, over the last few weeks, I've been telling you to buy the dip, and I've given you a couple of ideas on which companies to buy. One of them was Adobe. I pointed this one out on March 13th. I noted that it had come back down to support at 420, and then it had come back up, or it was starting to come back up. And today, this is what the stock chart looks like. It had bounced all the way from 420, and it is now closing above $500. You could have made a nice and easy 20% in under 2 weeks if you had just recognized the support and realized that it was bouncing off support. So really beautiful trade there. Next one I want to point out is Facebook. I pointed this one out when we were breaking through this trend line. You can see that the stock had basically been rejected by this trend line 4, 5, 6 times right here. We had finally come up to a good test on it, and it looked like we were going to break through. And today, that stock very clearly broke through, and now it has broken through all-time highs set at around $300 here. We have now set a brand new high in the last week at around $315. You could have made a nice and easy 10-15% on this one as well. And then the last one is Google. I've had my eyes on Google for a very long time. I noted last week that it was trading within a channel right here. However, we were testing the top of that channel, and that represents a great opportunity for a breakout trade. And when you look at this last week that just happened, that is exactly what happened. We had a beautiful green day come Monday morning. If you had bought early in the morning, you could have got in really nicely. And then on Friday, we set an all-time brand new high for Google. This stock is an absolute monster. They have one of the best business models you can buy into, and this is a fantastic company. I've been saying it for weeks now. Now, what I want to point out to you this week is a couple of companies that are all trading a little bit similar with a similar pattern, and the reason that I like this is because when stocks trade with a similar pattern, you can use those different stocks to confirm when that pattern changes. So if only one of them changes, but the other two keep falling, you may want to be a little bit hesitant about buying in at that point. But if you see that all three stocks in the same industry that are showing similar patterns are starting to reverse and are starting to change trend, then that is an elevating factor that can help you inform your decision and help you get into that stock because it gives you a little bit more confirmation. And so that's what I want to point out to you here because it's starting to set up. And so the three companies that I'm looking at are Good Food, Very Good Butchers, and Pontus Protein. And so I just want to point this out to you. The stock had support right here around $7 or $8, runs up to a high of $14, and it slowly kind of tails out back down to support right here, right at $8. And so if I was going to get into Good Food, what I would be looking for is to make this a bounce trade where I think the stock is going to bounce off $8. Now, once I have confirmation of that bounce and the stock actually starts to move higher, that's when I would enter the stock and I would try and set my stop loss just below support. In this case, I would probably set my stop loss at around $7.50 or maybe $7, and I would try and take my profit at a 2-to-1 ratio. So whatever my risk is, I'm looking for a 2-to-1 risk to reward ratio as long as that makes sense within the technicals. If my risk to reward ratio comes in at like $15, $16, that trade doesn't work for me. But if I can pull my money out before the next level of resistance, let's call it $11 or $12 right here, that's the trade that I'm looking for. Now, what I want to show you here is the pattern on the chart between Good Food and the next two companies that we look at because they're very similar. And this is what you want to look for as a trader because you can use this as confirmation when that trend actually changes. So this is the Good Food chart, and then this is the Very Good Butchers chart. As you can see here, we've got support at $4. The stock runs up to $9.50, and then it slowly tails out all the way back down to $4 here. Now I got a little post here because I'm pretty proud of it. I actually sold very at the top here. I sold it right around $9, and now I'm waiting to buy back into it. So I'm looking for an opportunity to get back into this stock. It has major support at $4 to $4.50 right here. I think if I was going to get into it, I'd put a stop loss at $3. I'd try and take some profit around $7.50, $8 here, and I would probably put a trailing stop loss on this as soon as it sort of broke through the trend line and I got into the trade. So that's how I would look at this one. And then the last one is Pontus Protein. Again, the stock pretty much got listed at around 50 or 60 cents here, so major level of support, runs up to $1.65, slowly tails out to the exact same level of support. So what I'm looking for is all three of these stocks to basically start to turn around. I'm going to use that as confirmation for price action, and then I'm going to take a position in whichever one represents the best opportunity for me. Now, the next stocks that I want to point out, first one here is DocuSign. This is a stock that was trading within a channel for almost a year right here, and then it fell through the bottom of the channel. It came back down and it basically tested the previous level of support. It rose up a little bit. It had 3 nice days there, and then it came back down to that exact same level of support, establishing a trend line, now breaking through that trend line, moving through the short-term moving average and coming up to our longer moving average of 50 days. The MACD looks great. The RSI looks good. We're starting to see a little bit more volume on these last 2 days. I'm waiting for a little bit more confirmation on DocuSign, but I do think there's an opportunity there from a technical standpoint. Next one is Apple. I've been talking about Apple for a while now. You saw it came back down to support, and now it is running up. Over the last 5 days, it's up like 5 or 6%. It's doing extremely well. I'm expecting some resistance right here around 138 to 142, but if we can break through that, that is going to be a perfect breakout trade for Apple. You can get in now and you can hold it through the resistance, or you can wait for confirmation, but I do think if you're new to trading, this is the stock that you want to hold. Apple is a long-term trade, and I think Apple is a phenomenal company, and they just reported the best financial quarter that any company has ever had. So I think they're doing absolutely amazing. Okay, now next company I want to talk about is Fisker. I've only mentioned these guys on the channel maybe once or twice, but they're a very interesting company. I personally actually don't like them. I don't like the car. I don't like what they do. So I'm not a huge fan of the company, but when I look at the chart, it's coming down to a very interesting level. As you can see, the stock traded right on $15 here for like December, January, and February. It didn't really do much, and then it ran up to around $32, mostly on just EV hype. There wasn't a whole lot of news that came out in between there that would have doubled the stock price. It was mostly just hype, and now the stock has come back down to the exact same level of $15, exactly where it was before. And so what I am looking at here is I think there's some support at 15. I don't expect the stock to bounce way back up though. I don't expect it to do very well over the next 3 months. And so what I am looking for is if the stock breaks below 15, that is going to be breakthrough of a very key level of support, and I may be interested in shorting Fisker at that point. I think it could drop down to as low as $8 or $9 right here, and so you can short it from $15 to $10 right there. You put your stop loss just above 15, and that way I think you can manage your risk, and I think there's an opportunity there if you see confirmation that the $15 level of support does not hold. Okay, next stock I want to point out is Tesla. This is one of my favorite companies. I don't own a position right now, but I did do extremely well on an options play right here back in March, so I'm very happy with that. Since then, the stock has established resistance at $700. It has established 2 consecutively higher lows right here, which makes me think this is probably going to be a bull flag or an ascending triangle right here. And I think we've got some major resistance at 700. So what I'm looking for in Tesla is for it to either drop and retest that support line and then bounce back up. That's going to be your first buying opportunity. Or if it doesn't come back down, I'm looking for the breakthrough of 700. Those are going to be the 2 entry points for me into Tesla. I think for me, it's probably going to be a short to medium term trade. I don't plan to hold Tesla long term. I like to be sort of in and out of it. That's just my trading strategy. Now, the next company I want to point out to you is MindCure Health. I am very bullish on this company long term. I do own a position in it. I like the CEO. She does an extremely good job, and I like what the company is doing. And when you look at the stock chart, you can see it hasn't done so well over the last few months, but you can see here that it fell through a key level of support and established new support at 40 cents. It has double tested this 40 cent level, and over the last 2 days, we've got 2 green days we're moving over our blue moving average right here. The RSI is coming out of the oversold zone. The MACD is starting to move higher, and Friday had more volume than the week before that. So I'm very, very positive on the company long term, and I'm starting to see some very bullish signs on the technical chart. If we see this continue going into Monday, Tuesday, Wednesday, that's probably going to check all my boxes, and I think there's a great opportunity here. I'd like to see it break through 50 cents and start to move higher, because I do think there may be some resistance right there from previous support. But if we see that, I'm going to be very, very bullish on MindCure Health, and I may add to the position. Now, if you guys are interested in learning how to read the charts, understand these companies, and actually find your entry and exit point, then definitely consider signing up for my Stock Market Fundamentals course. It is completely free. When you sign up with the link down below, it'll take you to Skillshare. You'll get 2 weeks free access to the entire Skillshare platform, where you can take my course as well as any other course. And then after that, it's about $20 per month, but you can cancel at any point. So take the course, cancel your subscription in under 2 weeks. You don't pay a single penny for it. There's over 4,000 students that have taken my course. There's over 200 reviews on it, and 82% of those people say it exceeded their expectations. It's hosted on Skillshare, which is a very reputable platform, and the link is in the description to this video. I promise you it'll be the best free resource that you can find online. Now, the next company I want to talk about is Fiverr. This is an online website that just has a phenomenal business model, and I'm really interested in this company because I think there's some very clear support right around $200. You can see that the stock has bounced off $200 several times right here, and I think there's a trend line being established over the last few months, and over the last 2 weeks we have just broke through that trend line. And so I think there's support at 200. If we see the stock continue to move up over time, I think there's an opportunity to get in there, especially as we break through the moving average. I think there's a great opportunity there. You set your stop loss at 190, 195, and you can get out and manage your risk. Now, the next one is CloudMD. This is also a very beautiful chart, because you can see we have very clear resistance right around the $3, $3.20 mark right in here. You can also see that we have very clear support established once back here in September, and then established again just at the end of March there. We have bounced off of the support, broke through our trend line, crossing through the moving averages. RSI is moving higher, MACD looks great, and increasing volume over the last 3 days. So I'm very bullish about CloudMD. If we see green on Tuesday, I think there's an excellent opportunity here as well. Next one is BioSig. This stock ran as high as $12.43 before coming back down to $2.79, which is absolutely crazy. But since then, the stock has pretty much been trading within a very clearly defined channel. It's got major support at $4, and it's got pretty big resistance around $5.50. So what I am watching for is the stock to break through this $5.50 and these previous levels of support. If we see that, I'm probably going to take a position in BioSig. I've interviewed the CEO. I've covered the company. I like what they're doing. I think there's a great opportunity for what they're doing, and the growth so far looks pretty nice for this company. So I'm a big fan of BioSig, and if we see a breakthrough of this kind of top trading channel right here of this previous resistance, that's what going to be my entry point into the stock. Last one I want to point out to you is Square. Now, I haven't talked about this one over the last little while. I'm super bullish on the stock. I like everything about the company, and I just want to point this one out because technical analysis sometimes gets too complicated, and sometimes people put too much into it, and all you really need to do is just look for support and resistance, and Square is literally the most perfect example of that. If you look at this $200 level, you can see that it acted as resistance right here. It acted as support once, it acted as support twice, 3 times, and 4 times. And if you could have saw that by the 4th time, you could have noticed that the stock was coming back down to 200. It literally sat there for 4 days. You could have realized that 200 was a key level of support, and it was holding up at the moment. And if you had bought in there, you could have made a nice and easy $50 a share and rode it up to $261 without any risk or even consideration of having to sell it yet. So I'm a huge fan of Square. I think there's a big opportunity here, and if it either comes back down to 200, I will be buying in for sure, or if it breaks through 283, that could be a great opportunity to get in on a breakout trade or a scalp trade. Now, here's my final game plan for next week. I'm going to keep a very close eye on that food industry. I like that Good Food, Very Good Butchers, and Pontus Protein are all trading with similar patterns, because I'm going to use that to confirm the trend direction and make my trades. Second thing is wait for confirmation on the breakout or the bounce. I've made a couple of trades this year where I just got in a little bit too early, and if I had waited for a little bit more confirmation, I probably wouldn't have got into the trades, and I probably would have found better opportunities. So that is a learning lesson that I'm going through right now, and I want to pass that on to you. Do not get into a stock just because it is coming down to support. Wait for it to find support and buy in on the turnaround, buy in on the change of direction. That's when you want to get into the stock, and make sure to keep it simple. You do not need to add 10,000 indicators or have a super complex strategy. Keep it simple, buy the companies that you like, and focus on your strategy. I'm a big fan of MindCure, Fiverr, and BioSig medical devices this week. Those are on my watch list, as well as the food industry at the top. And if you guys get any value out of this video, remember to click that like and subscribe button. If you're looking for a new broker and you want $50 in free commissions, check out the link down below for Questrade. And if you're looking for a Discord chat, you should definitely check out the link below. That's where I'm trying to build a community of traders to share their research, share their knowledge, share their due diligence, and share their trades so that everybody can get better, can make more money, and you don't have to do all the research sitting alone at home. You can share your research with everybody so that you can get access to the research as well. That's the goal of my Discord chat. If you're interested in that, it's $5 per month. I'd love to have you, and the link is down below. Good luck trading, good luck investing, and we'll talk to you soon.